Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. So, welcome, Dino. How's it going, man?
Very good. How about you guys?
Doing good, doing good. I'm quite excited for today. We have another rent-to-own big player here from Ontario. We all know you're the big guy for rent-to-own in Quebec. Okay, fine, that's been established. But you need to share a little bit Canada. So Wayne here is our guest today and going to be telling us a little bit about his experience. How's it going, Wayne?
I'm doing great, guys. Thanks for having me.
Actually, when I started RTO, Wayne gave me a hand because we met in a mastermind with the corrupt members, which is all the members of the rent-to-own program in Canada, which we are a proud member. And so I met Wayne back then, and we shoot the shit a few times, and we got on a Zoom call because it was during COVID, and he gave me a very good hand for the business and the way it was structured and all that. So thanks for that, Wayne. I really appreciate it.
No problem.
And since then, we've been talking on social media, and Wayne evolved a bit in the real estate business. Is not only doing rent to own now. So, the dance floor is yours, Wayne. But I just wanted to set the table to see how to tell the audience how we've met in the past.
Perfect.
Yeah, I would look forward to hearing about it. So, Wayne, very simply, how in the world did you ever get started in real estate?
It was funny. I stumbled upon it. It was, I went to school for business, have always been on the business side of things, working a 9 to 5, and was never a huge fan of mutual funds, just because I couldn't control anything. And I was at work one day, somebody handed me a book. I think everybody knows Rich Dad, Poor Dad, handed me the book, and I read it, and I was like in awe. And I just thought, for years leading up to that, everybody knows the value of owning real estate, right? Everybody goes out and seeks to own their own home to begin with. And then as I just did more and more reading, it just started to really resonate with what I wanted to be able to achieve, especially being, on a corporate job where I'm working 80 hours a week. I always wanted something else that could have replace what I was doing. So I was just started by reading that, and then got into reading half a dozen other real estate books. And then finally it was, that one thing that everybody hates to do, and that's take the step and take some action. And finally the point came where it was just like, all right, you know what, let's just go do it. So Extremely Green in 2008, looked at buying a townhouse through a company who they would come in, buy up like an entire complex of townhouses, and basically convert those into a condominium style of investment. And then investors would come in and buy one. Long story short, we got into that with this company. I got into it with my wife. We got into it, we put down our deposit, things were going along. Warning bells went off and things didn't seem right. We wanted to exit out of that before it even happened, just because of the sense we were getting. We ended up not being able to get out of what our deposit was. So we ended up losing $10,000 off the hook with these guys. And it just didn't resonate. And as I look back at it now, I kind of laugh, because back then it was like, oh, don't worry about the negative cash flow. It's all about appreciation. And I'm like, oh, okay. Being green, you're like, hey, no problem.
You took it for granted,
right? Mm-hmm. Yeah. Okay. So I got to put in $120 a month myself. No problem. At least, it'll grow type thing. So we literally came out of that, and my wife was like, that's it. Never again. Never doing another real estate deal whatsoever. I was like, oh, okay.
Wait a second.
Yeah. Fast forward maybe a year after that, met these two young ladies who basically started their own rent-to-own company. Their job solely was working with tenant buyers, screening them, prepping them, getting themselves ready to want to basically have home ownership. And I would act like the bank. So after having a couple meetings with these lovely ladies and actually introducing my wife to them, because I figured, hey, if it came from one female to another female, it might be a lot easier, because here I was like, let's do a real estate deal. Let's do a real estate deal. And from there, it was great. The concept seemed great. We're both professionals. It allowed us to be able to still work, qualify, and then trying to get into that business that way. And that was 2010, and hadn't looked back since. So
okay. And that was a private land, if I understand, right?
No, it was literally, it was a rent to own. So they had the deal, they have the tenant. We just walk in, we become the homeowner.
Okay.
And then from there, they become our tenant buyer, and we just kind of go through the process with them, getting them prepped and primed and ready to buy it back from us. So, and over that 10-year span, we've done about 25 of those. So
nice.
You said before a negative cash flow and you have to take money out of your pockets every month. My ears were bleeding.
Yeah, mine do today. Yes.
But it's just a good example of, like, at the beginning, you said it yourself. You read dozens of books, you educated yourself. And even then, you still don't know sometimes. And like, yeah, it could make sense, but maybe it doesn't. Whereas it's situations that now you'd be in, you'd walk out in 3 minutes, be like, just get out of here.
Oh, yeah, 100%.
But at least he had the gut feeling.
Yeah.
That was telling him not to do it, so.
Well, and it's funny because, after all these years in being in rent to own, and rent to own has gone through a cycle of really bad press and good press, and there was a lot of shysters, let's say, even when I started into rent to own, who were literally doing that. They would put anybody into a rent to own deal, hoping that they would fail, so that they could evict them and put somebody else in there and take their money, and just continue to do stuff like that. And for me, as we got into rent to own, it was about helping that individual out and becoming a homeowner, because there's nothing more gratifying once you're able to actually become a homeowner. And then hopefully, if you're that next level, understand how that equity in your home can do the exact same thing for you as it did for me. It's mind-blowing, right? But it was nice that we actually had that feeling of, in the beginning, oh, we better walk, because to your point, Dino, lots of people have done it in the past where they don't have those feelings, and then all of a sudden they're like up shit's creek, right? So
it'd be a good opportunity, because we talk a lot about rent to own, but some people still don't know what it is. Would you mind taking like a minute or two to actually explain what does that fancy term mean?
Essentially, what it is it's an opportunity to help somebody out who either has credit or bruised, damaged or bruised credit rating. Now, let's be honest. We know in Canada, our banking industry is super tight with wanting to lend, even super tight with guys who have done it for a long time and have equity and have money and everything else. They're still super tight on what they do. So these individuals just can't walk into a Royal Bank or a TD Bank and get mortgages, right? So it's an opportunity to kind of partner with them. You, the investor, basically become the bank. You own the title, right? You're collecting the rent from them, and then you're helping them reestablish themselves while creating a credit process for them where they get to actually turn around and fix their credit rating, so that after 3, 4, 5 years, whenever your contract term is agreed to, they're able to get that financing from a lender at that point and now have a house of themselves, right? Our strategy had been, for the most part, really a lot of refinancing to help people who just have got themselves into situations. A divorce has happened, or somebody has gotten sick in their family, and obviously the bills have just piled up. But looking at the numbers and looking at the asset itself and knowing that there's value there, being able to actually walk in and help them reestablish themselves, be able to buy that back.
I feel that those deals are the nicest ones. You help someone that's in distress as we speak, and they're in their home. And I've seen some families that they've been living there for 5, 6, 7 years, and everything was fine. And then shit hit the fan for all the reasons you just said before.
Yeah.
And then you come in and you help them. You buy the property. They stay in their house.
Yeah.
The kids don't have to change neighborhood, change school in the middle of the school year, make new friends. Nobody needs to know. There's no foreclosure sign or
That's right.
whatever. It's very like confidential, and
Mhm.
I love it. Honestly, that's why I went in the business.
Yeah.
I
100%.
love it.
And that's why we continued to do it for so long, was because we were able to help these folks. And to your point, nobody knows that they're going through a stressful time money wise. And let's be honest, I mean, 68% of Canadians live paycheck to paycheck today as it is. So everybody's got troubles. It just depends on how big they are. In this situation, we're able to help them out. So nobody has to know. That house that's theirs, it's still theirs. They continue to do it, right? What they do, Axe, is they basically manage it as if it was theirs. The toilet breaks, they're fixing the toilet. It's their toilet, right? So again, it gives them that sense of appreciation because it's still theirs. But to that point, as Dino's, you don't have to uproot your children and move them, out of the city or across town or all of that kind of stuff. And they can continue to just move forward. But at the same time, on the back end, have guidance how to fix themselves so that when they're done that, hopefully they don't get themselves into a situation again. So,
and it would attract much, I was going to say, better quality tenants in terms of it's their house, they're proud of it, they're going to maintain it, they're not going to call you to change a light bulb.
no, and I think that's the bonus of it. The way I've always looked at it is, when I got into it, people were like, "Oh, you're getting into real estate, oh, tenants and then toilets and everything else." And I'm like, for me, I have a built-in property manager. They're going to take pride in that because 9 times out of 10, it's already their home, right? They're gonna keep it up. If the toilet breaks, they're going to fix it, not me. The light bulb, to your point, Axe, if they want that changed, they're going to change the light bulb themselves because it's theirs and there's an end goal to it. And in the beginning, we already know what that market price is going to be that we're selling back to them. We've already appreciated that very modestly, so it's easy for them to qualify when it comes to that point. Like, we're not there to gouge them on some huge capital gains for us, right? It's really about trying to build that back for them, just so they can get a sense of being again. Like you go through a situation, I can only imagine that, a husband or a wife gets sick and you had 2 incomes. Now you got 1 income, and you know what, and you don't have any other funds, how deflating it must be if you're going to lose your home, right? This is an opportunity to walk in and be able to help them. And to Dino's point before, not anybody has to know about it, right? You just continue on. So
you said, like, over the years, you've done now about 25 of those deals. Just out of curiosity, like, what is your prime way to find those deals and situations?
So it was funny when I first got into real estate. I had grand visions of, I'm going to quit my job and become a full-time real estate investor. And I'm not a handy guy whatsoever. 9 times out of 10, I'll put a hammer through my thumb before I do anything else, and that's just hanging a picture. That's hanging a picture, and that's a 3M sticker thing that I do, right? So I'm all about finances and numbers and people. And as the time has grown on, even today, when I look back 12 years later, 13 years later, I go, no, I'm an investor. I mean, regardless of what it is. So when we got into this and we stumbled upon these 2 young ladies, they were my partner per se, right? I paid a tenant locator fee to them, which was compared to what I made on my money, was next to nothing. But they did all the legwork. They screen the tenant, they prep the tenant, they help the tenant, they guide the tenant along the way. And I truly act as the bank. And, it was, from that company to the next. I've never done them, and I think Dino's done them on his own before. I've always used a company to do those. It's a fee I get to write off as an expense anyways.
Yeah.
And in turn, I get to utilize their expertise and their skills and their systems to really vet out those tenants properly, right? Because these, especially the company that I was dealing with lately, they'll get thousands of clients that have come through who want to do this program, but they're not all qualified to go into this because their reputation is on the line for giving a bad tenant to an investor. That investor will not want to deal with them any longer if that's the situation, right? So.
Yeah, so the same here, Wayne. We go through the same thing here in Quebec. Also, we get 25 to 40 leads a day. People wanting to have the rent-to-own program.
Yeah,
you don't all qualify, believe me. And on those 25 leads that I'm going to get in a day, if I get one out of those, well, you know what? It's a good number.
For sure.
One qualified per day is amazing.
Yeah. It's amazing, but then think about if you're looking at 25 to 40, how many people aren't going to qualify for that standard that you're setting? Because again, to Dino's point, he's got investors that he needs to make sure that the reputation is kept well, so that if he's passing it on to an investor, that investor is not going to think bad of his company. Yeah. And you don't want to put a shit product out there and a bad tenant out there, because all that's going to do is abuse your name itself, and then before you know it, you're not going to have a business any longer. So
funny you say that, Wayne, because actually this morning I was driving and I had one of those investors in the car with me.
Oh yeah.
And we were having a discussion, and she did a few transactions with us, and she's like, Dino, how's it going with the tenants? I'm like, fantastic. Everything's fine. You don't hear nothing. That means life is good. You get the money in the bank every month, and life is great. So these people are investing with us and with you, and they sleep at night, and
that's right.
Money just comes in. That's passive income, it's great.
And so you mentioned that, so you did a number of those deals, and then you're more of a finance guy, as you said, you like the numbers. So did you keep just doing some rent to own, or because it would make sense for you to just go really strictly on the financial side?
Yeah. So we've done, out of all of those, I think I've only seen 2 of the properties I ever invested in, other than pictures. Like I have 2 that I physically have actually
that you went to.
Yep. Yeah.
Wow.
Because I'm about the numbers. I'm about the numbers, the market, the area that it's actually in, right? And the partnership and trust that I've put in with this company, that they know what the house is like and everything else. And let's be honest, I'm now sending an appraiser in there to make sure that it's actually top quality, and they're going to tell us if it's not, right? Yeah. So for me, because I've been all over Ontario, and we've even done one out in Nova Scotia, which is our first and only one that we've done out of province. But I had one in Tobermory that we just sold, which is almost 3 hours from my house. I'm not driving there every month for, to go look at this. So that's where that trust that you build with your partners to make sure that you've got right property, right market, right tenant, and it's a godsend to do it. I think we've done all of our deals on our own with no JVing, but when I say that, we are sort of JVing because I'm working with a rent-to-own company who's doing all of that legwork, but they're just not taking 50% of my money. So it's a different aspect of things, but it allows me to do what I do, which is crunch numbers, analyze deals, and read people. So
I love that when he says he only saw 2 of his properties. I'm the same thing. 70% of the properties I own, I've never seen them.
Yeah,
never.
Yeah.
And in the rent to own program, we actually have one in Bécomo. From my place, it's like 9 hours drive.
Yeah. So who's going to drive 9 hours, right? Like you're not going to go look at 9 hours. So you're working with an agent, or you're working with people that are that know that area, understand that area, know the tenant, whatever the case might be, depending on either the style of investment it is, and you're really working towards that. And I think that's where a lot of people don't understand that one of the key factors in real estate investing is it's not a solo game. As much as my wife and I have invested our own money or equity from our home into our real estate deals, we're the only ones that are investing it. But I'm working with companies and brokers and agents and lawyers and everything else still on other sides who are going to feed that information. And I think people just have to understand one of the key things is don't ever think you're going to be alone, because if you try to do it alone and do everything on your own, you're going to burn yourself right out. You're going to give up real estate like there's no tomorrow. So
I agree.
It's a people business. We keep saying it, and you're the best example of that.
Well, I think that scares a lot of people, right? They don't understand, where am I going to get the money to become a real estate investor? And I think that's the biggest thing, that when I speak with people and I educate people, it's like, you own a home. You have equity in your home. I've never used any of my own cash. Every deal that we did came from equity in our home, knowing that the banks are going to be very lenient, allowing us to only go so high, making sure that I'm investing in the right markets and stuff of that nature. But there's money there. And I think people just don't understand. A lot of people still don't even understand what a home equity line of credit is when you actually ask them, knowing that there's money there. And to me, I'm looking at it going, listen, if I can invest in real estate using equity in my home, which theoretically, even though I don't have a mortgage on anymore, the bank owns. I'm using bank's money. I'm putting it, they're giving me more money as a mortgage, and I'm making money off of that. And then when I sell it back, I put that money back onto the line of credit. So I'm essentially in it for an infinite return, really. So, and I think that's the thing that scares a lot of people is they don't understand there's money that you have if you're a homeowner. Yes, it's a little more difficult if you just rent. But again, to your point, Ax, real estate is a people business. So even if you are a renter, that doesn't mean you can't be a real estate investor. So
OPM.
100%, man.
Yeah. So before you were talking about private lending, Wayne, is that something you're looking into or you're doing or?
Yeah, we've done probably 3 different private lending deals right now, and I am looking to scale and do more of that. You know, a lot of them right now obviously are on promissory notes. I'm only going to invest with somebody that I wholly 100% know and understand and trust. If I'm going to go in on something on a promissory note, 9 times out of 10, I would rather that security of being on that title if anything were to happen. The 3 that we did do, though, were on promissory notes because it's with a broker that I know, and we're such short windows. I think 90 days was the longest that we actually have had that we had money tied up. And then we did one with him and his business partner on a apartment building that they own that they needed to refinance and take out another investor that they had. And that was about a 6-month period of stuff where we were at least attached to the title itself. So it is, again, to me, it's very passive, right? I don't have to own it's like I went from passive with rent to own because theoretically I'm not really doing anything. I've got a team that does all the back end. I'm holding a mortgage. That's it. Private lending is even more passive because I don't even have to qualify for a mortgage. I just have to lend my money out and make some money off of that, right? So
OPM, you were using other people's money to do business, and now people's losing your money, using 100%. Your money to do business.
Yep.
And just out of curiosity, when you do those loans, is it, well, usually how long is it for, and what kind of, and you don't have to give us exactly like your service offer, but like roughly what do you charge?
So we were in the ballpark of 13 to 15 on the last couple promissory notes that we had done. But I mean, on private lending, like you can go anywhere from 8 to 15%, right? Yeah. You're going to go 8% if you're sitting as a second mortgage and you're, you know, against the solid piece. You know, the higher the return typically is on a promissory note. I was speaking to one flipper here in Ontario that I know that was looking for funds, 12%, needed it for 2 months, in, out, be done with it and move on type thing. So actually really just really depends on what deal it is and how it is. And I think the bonus of being a private lender is you get to control all of that, right? I get to really stipulate what kind of deal I'm looking for, what kind of return am I looking for, and what kind of security am I looking for, right? So I know that there's lots of lenders out there that will do, okay, you give me 2% up front and a 12% return. Other guys would be just give me 13% total. So again, I think that's the flexibility and the great thing about being a private lender is you get to kind of write that story. And if somebody likes what you're offering them and they need those funds, they're going to pick you up type thing, right? But I mean, they're roughly, you're looking, I've seen guys as much that just needed a bridge for a month, up until a 9 to 12 month time frame, right? So it just varies.
And you also, as a lender, get to pick and choose the transaction you want, and you get to pick and choose the investor you want to work with.
100%.
So that's
and I think that comes back to that understanding people, and then getting that warm fuzzy feeling to say, yeah, you know what, I like you, Alex, and we get along, Ax, and I understand your business and everything else. For sure, I would love to lend you money, even on a promissory note. Dino, you look sketchy, man. I don't know if I want to deal with you. And so you get that. That's right. So you get that opportunity, as Dino said, to pick and choose, right? And I think it really comes back to, especially with real estate, it's about people, and you've got to be able to read people and just kind of get that sense of feeling for them. And don't feel bad to say no. Like I've had people that I off of Instagram, hey, we don't really know each other, but I see your posts and they're great. And I see your private lending, I'm looking for somebody to lend me $300,000 in 3 months. Would you be interested? I'm like, dude, I don't even know you. Like, yeah, you great that you're throwing out a sales pitch. Way to go. Hopefully you find somebody that can actually do it for you. But I want to understand who you are before, we give my money over to you. So,
and from your point of view, like you said, you're very diligent on the numbers. So you might look at like 3 different deals, and from a financial point of view, they all make sense and they all work out. But from a people side, there's probably 1 or 2 where you'll be like, yeah, the numbers are good, but he doesn't smell good. I don't want to do business with him, and that's okay.
Yeah, and I think that's where, again, people have to be intuitive of their own mindset to understand who they're dealing with, right? Because numbers can look nice on a piece of paper all day long, and it could be even nice on a market that you think is fantastic. But if you don't know this individual, or they just come off and give you a really bad vibe, and then I would just say don't, because it's your money, and you decide. There's lots of people out there that you get to know. And again, real estate investing is about networking and really getting to know people. We have a lot more good people out there in our industry than we do bad people. Not to say that there's not bad ones out there, but we got a lot more good people out in the real estate investing world, that as you start to network and get to meet people, you're going to find there's people that you can go to and say, yeah, hey man, love to help you out with your project. Here you go. Boom. And then all of a sudden get your money back and get your interest payments, and hey, let's do it again sometime. Like, you know what I'm saying? So,
you know what, Wayne, what Ax just said, the numbers might be very good on paper and the property is awesome and very low loan to value, whatever, but you're not so sure about the person and you decide to go ahead anyway. I mean, as a private lender, you said it before, it's passive. You don't want to bang your head nowhere. And even if the numbers are great and you always have to run after your money, or you don't get paid, or seriously, you don't want to go through that. So I think private lenders do have take the same road that you take. So they were investors at one point and decided to go more on the lending side because they really want the passive thing, and they don't want to do the legwork and just make it easy and simple.
Yeah, and listen, I mean, all these years of doing rent to owns, and again, even working with rent to own companies who are doing all that back end, there's still stuff. I mean, as I say, it's hands off. There's still stuff I have to do. I mean, I speak with my tenants every month, and you know what, we're having a Zoom call to make sure things are good and that they're staying on track, and if there's anything that they actually need, I mean, so there is some work attached to it. Is it as much as somebody doing a flip themselves or buying a multi-unit project and actually having to go out and find off-market deals or scan through MLS or any, like, I don't sit here and scan an MLS. Like, I don't have the time for it or the excitement for it. Sitting here looking at a house deal doesn't excite me. Like when I first got into real estate, I thought that's what I'll do. Like, I'll do all these great things. And then I look at it and go, man, I get bored looking at that stuff. Just give me the numbers, show me the deal, let my numbers go. And if it makes sense and we get along and I got a good vibe, chances are we got something to work on. But, that private lending just takes it to one further step as to truly, truly passive. I don't have to deal with mortgage guys. I don't have to deal with, tenants. None of that kind of stuff. So to your point, it becomes even more passive than anything else. So,
and on the index of passivity, you're pretty far out there. Like you get great returns from the real estate, but you don't really have to do that much.
Are you saying Wayne is lazy or?
Absolutely, that's what I'm saying. Yes.
No. Listen, when I first got into it, I started coining myself the lazy investor, man, because at the end of the day, I don't want to be that guy that has to go fix toilets, analyze a building structure, what it looks like. Because, Christ, I couldn't analyze it if my life depended on it. Throw a spreadsheet deal in front of me, I'll analyze the hell out of that thing. But send me to a building to go and see if there's asbestos inside a wall or what the structure. Dude, I might as well just jump in front of a train because that ain't gonna happen. But at the end of the day, yeah, I am lazy. I just want my brain to work and be able to go wherever I am on a laptop and go, yeah, I like it, let's do it, and kind of go from there, right? So yeah, Dino, I'm lazy, man.
I get that, don't worry. But you're still at the gym at 4:30 a.m. every morning.
Well, that's because I can, right? So
there you go.
Like the funny thing is I got into rent to own and I slept like a baby because I really, again, having that tenant buyer in there becomes your in-house property manager, who's actually going to take care of it because it's theirs. When you become a private lender, it's even more sleeping beautifully, because it's like, it's a relationship I've got with somebody, with a flipper, with a developer, with an investor, that I already know I built on. And then all of a sudden, it's just, I'm just lending out my funds, man. I can sleep like a baby, and off we go.
So what's next for Wayne?
You know what, I'm on this huge quest of, I'll continue to invest in real estate. To me, I'm biased, and that's the only investment that's out there. I don't know anything about cryptocurrency. I'm sure it's the next big thing, but it's not for me, or I haven't learned enough about something like that. I don't do stocks. I definitely don't do mutual funds. I dabbled a little bit in options, but I like to be able to control something, and real estate is something I get to control. So you know what, I'll continue on. I've got a JV that I'm looking at doing some multi-units, 6, 8, 12 plexes. Definitely going to go heavy into private lending. I've always been that kind of guy that give me 10% of the watermelon, not 100% of the grape, right? I'll take a little bit of a big pie and continue to do those, versus struggling and straining myself and killing myself hour-wise for 100% of the grape. But really what I want to push forward on is just educating people, letting them understand that real estate investing, or investing in general, isn't as complex as the industry wants you to think it is. They want you to make it feel that way because your mutual fund guy wants his check every 2 weeks going into his fund so that he can make his commissions all the time, right? And I think it's funny how people fear away from real estate investing, yet they'll go to their financial planner and give their money over to them with no control.
Eyes closed.
100%. Hoping that this guy does something for them, not realizing that 2% return that they made, the company they actually invested with, they actually made 7% off your money or more. And you could have easily have done the same thing yourself with just being pointed in the right direction. And I think the problem is there's not a lot of people willing to help point somebody in the right direction. Everybody's out there for their own good. And I get it. Listen, everybody needs to make a living, but I'm not here to sell courses, and I'm not here to do any of this. I'll be the first guy that just steers somebody in the right direction for the sake of, hey, you're going to get yourself in a better financial situation. Here's what you do. Go do it. I don't want your money, but you're going to come back to me in a year and go, oh my God, you were so right. And to me, that's way more gratifying, because I can go make my own money myself. I don't need your money to go and do that as well. Unless you want me to invest your money, I can do that for you as well and make you a return. So, I think more so into the educating people and helping them make a way better return for themselves. So
I feel that real estate investors tend to naturally want to help others. That's something I've noticed in the past years, that in that domain, like real estate, people want to help each other, and I think there's room for everybody.
But how is it? Why do you think we're particularly inclined to want to help each other? And I know all three of us definitely do, but it's why more in real estate than maybe other industries?
Well, you see, Wayne was pointing out before, like in stocks or all these guys that are selling whatever placements or insurance, and I don't have nothing against those guys, but it seemed that they're always fighting against each other. Or let's take my past career, the car business. Nobody wants to help no one, believe me.
No.
It's 0, 0, 0, 0. So always fighting, trying to be better than the other one, and not sharing secrets or the next thing. But in real estate, I don't feel that. And if it's in multifamily and flipping, private lending, knowledge, whatever, I see that some don't want to help, but a lot really want to put it out there and help.
And I think to that point, like mutual fund guys and stock brokers and insurance salesmen, they're all working for a commission. So to Dino's point, Axis, I don't want to give somebody else the business, right? Yeah. To me, and I think we're so much more helpful in the real estate world because we're dealing with some big numbers, right? Like you're not walking in and putting $250 every 2 weeks into a mutual fund. You're putting $250,000 down with closing costs and renos and everything else. So, we're willing to work with that aspect of things. And I think even as an investor to do a joint venture, I'm willing to give up, money if I don't have to do all of the work.
Yeah.
Versus, if people really realize that you're giving your mutual fund guy, your money, and it is a joint venture, except they're just taking a much bigger piece of the pie than you're getting. I think people just don't kind of grasp that. So I think to Dino's point is, in the real estate world, we all understand that we need each other to grow.
Yeah.
Like nobody's doing it on their own. You can sit at home and be a day trader and pick stocks all day long by yourself and not need anybody. To do that in real estate, you'll never scale your business whatsoever, because you're going to get at some point capped somewhere. Lendability, just your time. Yeah. You're going to be exhausted, tired all the time. So I think, here we understand that, hey, we can do this together and take away some of that legwork for each other and still be able to be very profitable, because obviously there's way more profits in real estate that can happen for each other. Right. So I think that's probably why we're so helpful with each other. So
that's a really good point,
because we also have the time.
Yeah. We're not trying to make a quick buck and sell you something over the phone or over the internet, right? Like we get that. Like even, as I look at these joint ventures that I'm doing on these multis, this is all brand new. I've been in a rent to own world forever, where I didn't have to screen tenants because my tenant basically owned the house anyways. And what I'm screening really is their T4 that's come in and where they're working, how long they've been there, and what their credit rating is, and how can we fix that? That's upfront minuscule. Versus, I JV with somebody who has a construction background, who knows how to find off-market deals, who does all the screening stuff and everything else. And again, I bring the finances. Yeah. So I bring people in finance. They bring all the construction, tenant processes, everything else. I'm okay with giving up 50% of that, because if not, I would not be able to scale. I wouldn't probably even know where the hell to begin half the time. And I'd be chasing my tail while still carrying a 9-to-5, you know what I mean? So
doing something you do not like to do.
100%. And I think that's the biggest thing with real estate investing, is people have to understand what they like about it. Everybody can sit back and go, I love real estate investing because it makes great money. Okay. But there are so many different avenues and different ways to invest in real estate. Which do you truly like? Because there's contractor guys out there who are real estate investors who don't really get numbers.
No.
They get the premise of it,
yeah,
but not deep down, how do we really finite this to make it true? And then vice versa. There's guys like me that can't hang a wall, but I can look at numbers all day long and know what I'm doing, right? So, I think there's just so many different avenues, and people just have to look at real estate investing for not just that one single, I buy a single family home, it's a buy and hold, and that's it. And really look at the different ways to invest and what it is that they actually like about it, and go from there.
And dislike.
100%, right? Because again, that's where that JVing portion comes in, because I dislike carpentry, but I do like numbers. And if I can, both of us make money, short-term and long-term, I already know right off the bat, I'm not going in there to do flips because I don't know anything about them and they don't excite me to go in there and do it. But I do like to make money, and I like to look at numbers. So to your point, they've got to understand what they like and what they dislike. But there's so much room in real estate investing. I would say, as all the investing tools out there, there's probably more room inside real estate to do different things than there is on mutual funds or insurance, right? So.
Yeah. Hey Wayne, where can people find out more about you? There's a lot of people who are going to be listening to this episode. They really liked your attitude and your mindset. Where is it that they can get in touch with you?
It's pretty funny, as Dino called me a lazy investor in the beginning. I'm pretty shallow in what's out there. I haven't been super great at branding myself, but I am on Instagram constantly, so they can find me at Wayne.Dolson on Instagram. Follow me there if you like. Anybody looking for some insights, some help, some support, or just some answers to some questions, I'm more than happy to share that. And in turn, probably will have questions for them as well that maybe they can help me with. So.
For sure. All right, super. Well, look, thank you so much for your appearance today. It's been a real pleasure. And really enjoyed the conversation. And for everyone listening, as usual, if you want to keep supporting us, please subscribe, share it with a friend, send us some feedback, leave us a rating. It always helps with the algorithms. So thank you very much for your support. And as Wayne said at the beginning, real estate investing is about taking action. So first start with educating yourself, and then once you're confident, get into the action. And for a lot of people, the barrier is making offers. So take your courage with your two hands, write some offers, and hey, take the chance. Worst comes to worst, people are gonna say no. Big deal. All right, on this note, talk to you next week. Thank you very much, and jump into the action. Ciao.
Thanks, Wayne.
Thanks, guys.